Back. REITs have been back in the spotlight lately, emerging finally from the scare of potential rate hikes. And there's a Canadian REIT that has a fast and growing presence in both Brazil and Germany, in the healthcare sector, specifically in both countries. For a closer look, we're joined now by Dalla. He's Chief Executive Officer of Northwest International Healthcare Property REITs. He joins us in the studio. Welcome and thanks for being here. We had a bit of fun with Brazil and Germany as we teased this segment before the break. They're playing today, I believe, in a semifinal of the World Cup. But your REIT has some significant real estate holdings in both those countries. Explain the strategy of the REIT first. Why healthcare?
Yeah, it wasn't initially a World Cup strategy, although we have to manage those interests in the company. But really, it's a Canada Plus story. We started in healthcare real estate about 10 years ago in Canada, and got to know the industry very well here. Of course, our industry is a bit stylized in Canada in that most of the healthcare infrastructure is really owned by governments, and think of hospitals and who owns hospitals. So as we looked around the world for great markets to invest fundamentally in real estate, as well as markets that supported the possibility to invest in sort of a broader class of healthcare real estate, we targeted in on good places like clearly Germany and Europe and Australia and Brazil. And so we've been active on that strategy for about 4 years now, and really a Canada Plus strategy where we've now accumulated a portfolio of almost $850 million of global real estate in some of the best markets in the world. And a lot of that is into hospital infrastructure, which we just couldn't invest in Canada.
Just sticking very briefly with Canada, a typical Canadian hospital is government-owned, and the real estate is owned by the hospital itself, is it? It's not being leased by a private owner. Yeah,
really, in Canada, other than PPP or P3 initiatives, which are more structured finance, if you will, almost all the healthcare infrastructure, like hospitals, are owned by provincial governments. So, you know, unless that were to change, of course, that opportunity to invest doesn't exist for them.
And so in your non-Canadian markets, or non-Canadian places where you are now holding real estate, what type of healthcare systems do they tend to have? Greater private participation?
Exactly, yeah. So that's really one of the key elements for investment in the sector, is that it needs to have both a public and a private healthcare system. So, you know, a little bit different in each of the main markets that we're in, but certainly Germany, the closest to Canada, and that predominantly public with a little bit of private. Australia, by design, almost equal public and private, and really a true dual system. And then Brazil, although universal public health care in Brazil, challenged in terms of access to the public system. It's overwhelmed, and so the private system really is the system of choice if you're able to afford it. So for us, obviously, when we go into these markets, we're looking at the strength and the size and scale of the private hospital operators, and we're really able to form great partnerships with those hospital operators and enter into really long-term credit tenant sale leasebacks of their real estate.
Paul, because the system's different, do you, and I was admiring your financing in Germany there, 248 fixed for 26 years is great. Do you go in, like are cap rates higher so that your spreads are higher to account for you may not think so, but a perceived higher risk, at least for Canadian investors, right? They don't know these countries, the healthcare systems very well, probably.
Yeah, great question. So different in all markets in terms of cap rates, and of course we know real estate's really a local market condition. So we have a range of cap rates from Germany at the headline level, which is probably pretty close to Canada, in the 7 to 8% range, with even more attractive financing opportunities.
Yeah, so like a 5% spread. That's huge.
Exactly. Out to Brazil, which is sort of in around 10 plus, but financing is very difficult and expensive. So all, you know, told, though, our investment thesis sort of numerically was designed to deliver around low to mid-teen sort of AFFO returns, cash on cash, if you will, and mid to high-teen internal rates of return, which would be sort of a long-term measure that the real estate industry would use. So we think those numbers both are about 400 basis points higher than what we could do in Canada, and we're able to do it in even higher quality assets. So for us, to answer the risk-return question, we think there's a very compelling differentiator, and you know, all of this, of course, underpinned by healthcare. And in all of these markets, the trends, albeit at slightly different stages of their demographics and economic cycles, if you will, the reality is it's still underpinned by a huge market. Demand for healthcare is rising. Populations are aging, even in Brazil, and of course those sort of needs are overwhelming many of the public systems and really creating this huge demand for private services. And so all of the operators in the markets that we're in really are benefiting by these trends at various stages. So we think that's really driving our opportunity set as we look at the hospital operators needing to invest in their businesses and coming to that classic sort of core, non-core decision around real estate. And as we know, most industries, once they are mature enough, determine that real estate's probably non-core. And so as a great long-term real estate partner, we're able to work with these scaled, global-sized healthcare operators and really make very compelling investments. For example, a deal that we've just done in buying 3 large hospitals in Brazil, around 9.5 cap investment headline, but 25-year triple net lease. Annual CPI adjustments. Now in Brazil, that's running close to 6% a year. So really compelling growth. And that's one of the great differentiators that we see by being able to invest in this type of asset.
Briefly, how much are you paying out to unit holders? What's your payout policy and how much are you paying out?
Yeah, the company's young, so we're evolving those issues. We realize that stability of distribution is important. So for the moment, actually our distribution yield is between 10.5 and 11, I guess, which is high. And I think that speaks as much to our story not being fully understood by the market. That's about a 95% payout on our AFFO. So we think that that's broadly in line with with the market. Where we've taken some big steps recently is around structure and governance. I think we announced recently in April that we were internalizing our management team into the REIT, which is certainly a desired structure in real estate investment trusts right now. And so we're in the midst of doing that. Or at the same time, we're also graduating to the TSX from the TSX Venture Exchange and expanding our board. So there's a suite of sort of governance-related changes that we think will allow the REIT to get broader coverage and be better understood, and hope that will allow us to differentiate some of these internal compelling advantages that we have.
Who's going to win the soccer match between Brazil and Germany?
Well, Northwest International for sure, and that we're both in Germany and Brazil, but we are actually having an IR event today at Real Sports, and I have a feeling that there might be a slight bias towards Brazil given it's the host country, but nonetheless, it's going to be exciting.
Okay, we'll take that as an on-the-record prediction for a Brazil victory today from Paul Dalla, Lana, Chief Executive Officer of Northwest International Healthcare Properties REIT. He joined us here on Queen Street in Toronto.